Welcome back to another edition of Super Prime UK. James, how's everything going?
Yeah, no, really good. Thanks, Rob. So far this year, I think we had, as a business, quite a strong January, which is obviously on the back of a relatively high-performing January as we compare it to the last 2 or 3 Januaries we've had, where it's been very much a standing start. And I think this year was markedly improved on the last couple. And in terms of some of the data, which obviously it's built off the market. Last week in London, we had 158 sales. That's the strongest sales week we've had in London this year, and generally the figures have been around the 120 mark week by week. So again, we're sort of broadly in line with the averages where we were last year on that, but it's good to see the market continuing to function and sales take place.
And how are we looking in Super Prime?
Super Prime, again, strong starts to the year, 10 Super Prime 10 million plus sales in February, also a relatively short month, but again, highlights some of the activity which we're seeing in the market.
Yeah, one of those sales are a road that we have talked about a lot on this show. Another big chunky 25 million plus sale in Avenue Road. That is the road that keeps giving to our show, and it's just a road that's performing year on year with super prime luxury developments, knockdown, rebuilds. And I suppose the reason why it's able to do that, geographically tremendously well located next to the Regent's Park, but also not as restricted in terms of planning to build these super houses.
Yeah, exactly. It's the Avenue Road. It's like a central London Bishop's Avenue, just in terms of what it is. It's a relatively busy thoroughfare, although the houses are set back. A lot of former embassies on that street. But what you do get, which you don't get in a lot of other streets around there, is you get very, very large plot sizes, which buyers really like as a highly desirable attribute, and that Rob, translates into a lot of super prime activity on that street. We've seen a number just off Avenue Road, saying last year we had some 50 and 60 million pound sales just off Avenue Road between there and Primrose Hill. So it's been a hive of activity, I'd say, that specific micro location in the last 12 months. And Rob, where does that leave us for the lending market? Where are we in terms of the the sort of prime, super prime, and maybe just the bulk of the market?
So we have been seeing, as rates slowly but surely come down, we have been seeing Mr. and Mrs. ultra high net worth come back into the lending market slowly but surely, normally off the back of those unleveraged assets that now they want to take some liquidity out. And there's been some very attractive products in the market that space is jumping on. LTVs have reached what I would say is record high levels for the space. So, some lenders are going as far out as 70, 80%. And obviously, depending on who the underlying borrower and applicant is, what the asset is, and also in super prime banking world, generally assets under management may be going alongside that. So it is moving slowly but surely. There is more activity. And again, I do expect that to strengthen as rates come down, as those products become more competitive and the pricing improves.
Yeah. Okay. I mean, it's 70, 80% LTV. I mean, Rob, in the bulk of the market, that's quite a normal loan to value. But where were we historically in terms of super prime LTVs? And is there a reason why these have just been extended slightly?
So historically, it would have always been perceived as a higher risk. So some banks and lenders had a 50, 60% cap on their LTV to manage their downside risk and exposure. But I think as the markets become more nuanced, more specialized, more experts in super prime, banks have made a risk and a credit decision that they're willing to push that LTV coverage out based on a better understanding of both the asset and the underlying borrower.
We look at the flip side of the market as well. As you were saying there, rates just started to come down and adjust to the last base rate cut. We've now got 5 UK lenders offering mortgages of sub 4%, which wasn't where we were, 3-4 weeks ago. And I think that's going to continue to, filter into the market and create more activity. And, just across the market, there will be sort of both prime and the middle market who have assets which are debt free, and they'll be looking to draw down on these new deals, have more take up.
Yeah, let's be really clear, James. The second that you're in 3.5% territory on that lending, then prime and super prime lending, refinance, acquisitions increases tremendously. The market is waiting, the market is needing to get to those levels. And I can assure you, when we reach 3.5%, you're going to see a real uptick in activity.
Yeah, it definitely feels like there's some pent-up demand within the market. So, Rob, in terms of other property news, it's been quite a big couple of weeks, really, in terms of changes in legislation and the approach to certain asset types, such as the sale of new leasehold flats is going to be banned under new government legislation, which I think ultimately is a good thing. I think particularly in London, having a very a reasonably high proportion of overseas buyers, having a little bit more transparency in the market could be perceived as a strength for them, as it's very much a different system to some of the other European cities. So under common law, each flat will own an effective freehold of their property, whereas previously there was a different structure in terms of your lease and your ground rent. Service charges will still remain, and they sometimes can be some contention over the cost, but that's normally reflective of the services which each block provides.
I think it's a really interesting approach with common hold, changes to the leasehold reform, enfranchisement, ground rents. That whole space is under massive uncertainty at the moment. We don't truly understand the implications, how it affects the market, how does it affect the buy-to-let market, how does it affect pricing. There's so many question marks, and everyone wants to know what the impact will be from a demand perspective, a lending perspective, a return on investment perspective, income producing. There's so many questions. All the lenders and investors are approaching us currently and saying, James, Rob, where is this going to take us? What's the impact going to be? There are so many positions happening at the same time, and we don't really understand of when such changes will be introduced, at what level of the market it will have an impact on or not. And based upon all that, I think we've just got to take a holding position currently, James, and wait and see, because it's too early to call, no?
Yeah, I think so, definitely. And just touch on ground rents there, Rob. The last 5 years, hugely common in a lot of the reports on title, which I review. Lease forfeiture because of the rates, the amount which ground rents have escalated to or have even started at, very, very, very commonplace there, and obviously a risk for the lender, and something to get comfortable with the conveyancers. That obviously will alter within the new system, but there will be a huge amount of existing leases which we're not quite sure how it's going to be shaped. The government said it's determined to make conversion to common hold easy for the existing leaseholders. However, it's going to be a huge challenge as this would require some of the freeholders to give up their effective ownership of some of the existing buildings. And how's that going to work in the market in terms of rights for airspace, additional stories, which we see in London and some of the other UK cities. How's that going to work? Who's going to be the beneficiaries of that? A draft leasehold and common hold reform bill, which will include further guidance on this and how it's going to be detailed. This will be published later this year by the Ministry of Housing, Communities and Local Government. However, until that is released. We're yet to see the inner workings of how it's going to work and the roadmap to conversion to common hold.
Thanks, James. Last point for today, and a reoccurring theme for the show. And there's been a lot of doom and gloom about the non-dom position and foreign owners of real estate here leaving the country. A bit of positive news in that space, and we did discuss it in the previous show. There's been a record level of applications from US citizens for British passports, and that is something that we discussed previously, and I said that I believed that we were going to see an influx of US buyers and US citizens coming to London and the UK as they see it as the next best place to go in terms of education, infrastructure, legals, and that trend clearly in the level of passport applications has started, and I think that's a positive for the market. Lots of dollar-led US buyers coming in, and that can only be good for us, James.
Yeah, definitely. I saw the articles as well, Rob. But just in terms of month on month, year on year, it's certainly coincided with the new government in America and in the USA, and in terms of the makeup of the ultra high net worth non-doms who are undergoing property searches in the UK and are acquiring property, the US citizens are making up a really high proportion of that in the current makeup.
Yeah, so hopefully we'll have more news on that as that filters through to the market, and hopefully for everyone filters through in transactions, more activity, and a growing super prime space in 2025. Great to have you back, James. Good to hear from you, and we'll see you all again soon. Thank you, everyone.
Thanks, Rob. Thanks so much, everyone.